The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the February 4th terrific Thursday edition of today's Trader's Edge. I'm Rose Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure that you and I have an extraordinary one. And of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go look at the circumstances of these markets, what the bulls and the bears, the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, but more importantly, I'm here to serve you. So feel free, pick up that phone, dial on in, 877-927-6648, internationally, 727-445-1044. Would love to hear from you, especially on this terrific Thursday. Let's get things kicked off here. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we have the Dow. She's traded up 67 points at 16,404. S&P up 3.5 points at 1916. NASDAQ Composite up 3 points at 4507. Russell 2000 up 5 points. She's traded at 1015. Goldilocks up $14 at 1155. Silver up 13 pence at 1486. Lightspeed crude is flat, traded at 3219. Leading the charge to the upside, it's Khaki Cousins. It is Khaki International, CACI. That's up $14. That's up 17%. Granger Worldwide up 6%, 12 buckaroonies. Chipotle having a nice day, up $9. That's up 2%. Buffalo Wild Wings preparing for the Super Bowl. That's up nearly 6%. That's up $8 and change out here. To the downside, must not be a lot of people buying Ralph Lauren product. I'm assuming they were out with numbers out here, and the market not responding very well. It's off about 19%, down $22. I do like their product. I like their shirts. I like those real nice soft ones that they have out here. But I can say I actually haven't bought a polo shirt in a while. So instead, it's been more of these Under Armour and Nike, holy Nike shirts out there. We've got Google. That's off $17, down 2%. ICE Intercontinental Exchange off $6, down 16 buckaroonies. Google's off $15. ICU Med. That must be in the ICU unit, down 11.11% out there. That's down nearly $11, almost 11s across the board out there. But let's go see what these markets are doing out here. Let's take a look. Let's start off by taking a look at daily charts. Say, who's in control of the markets out here? Let's go take a look at the advanced decline lines for the New York Stock Exchange, NASDAQ Composite, and the Dow out here. Let's also take a look at where price is trading. And we can see here, if we start off with the New York Stock Exchange, the left-hand panel on my charts out here, we can see number one, price is above the 0.382 retracement level. Looks to me like could be set up an A to B equals CD to the upside. If it can take out the high from a few days ago, that's a trading day of February 1st out here. That high, by the way, is 96.51. It actually would be a very powerful move because I would anticipate that in doing so, we would have a rising advanced decline oscillator reading. We're already close to that 150 level. We were back at this 150 level back on January 29th. The real key is if we can get above it again and take out that swing point. Normally, during downtrending markets, those can be exhaustion moves. And in one sense, we can say it was an exhaustion move because it didn't really make a higher closing high. And price sold off into the low that was formed yesterday. But yesterday's low could in fact be the A to B equals CD to the upside. In the New York Stock Exchange, let me go ahead and see if I can put that tool. Well, I know that I can put that tool. Let me go ahead and put that tool. Oh my goodness, boy, do I have a lot out there. Let's see if this will go ahead and turn it on. Yep, that turns it on. And if we take a look at that A to B equals CD pattern out here, we don't have it confirmed yet, but we'll just simply anticipate and plan for it. If we do get it, it says price will move to 99.89. In fact, I would venture to say probably more like about 10,183. And taking a look at our A, B equals CD tool out there, that's on the New York Stock Exchange. So bulls in control of the market. Inside the NASDAQ composite, the same thing out here as well. Possible that yesterday was the C point of a to B equals CD to the upside. That would look like this. Let's put that on here. If in fact we get, I guess I already have that programmed in here. Now in this case, no, I don't have it. We've got to just change the C point. Market giving us some additional information. The A point is the same. That's going to be the low on January 20th. Your B point out here, that's going to change to the February 1st level. And come on, work there. And then your C point potentially being yesterday's low. That would give us a price projection in the 47.48. 48.10 would be the Gartley sell pattern. So between 47.48, 48.10 would in fact be the Gartley sell pattern. But as we speak right now, it's bulls that are in control of the game. Inside of the price is not price made that 0.382 retracement level inside the NASDAQ composite. That was the first move. Pulled back, made about a 0.618 retracement, and now it's time for it to continue on higher. In the case of the Dow also made a little bit more than a 0.382 retracement, but yesterday may have been the C point of the A to B equals C to the upside. Inside the Dow, that would give you a price projection of Roll'em Johnny. That would give you a price projection of 17,020. I would say more likely than not, man, how about that? That price could actually get us back to the 17,309 level. Nearly back up to its highs out here. So, and the only thing that is holding the market back, you're wondering what that is. It's really the VIX index. And it is in the VIX index in order, because it's a liquidity gauge. Like a lot of people will call it a lot of things out here. If you really want to know the best way to use it, by goodness sake, stop calling it a fear gauge. Let everybody else call it a fear gauge. You tell me how you trade off of something you just simply call a fear gauge out there. Yeah, slap me upside the head. Hit me with that 2x4 if you want to find the gift in every set of circumstance. Well, I'll give you what that gift is. That gift actually right now, let's switch over to this other chart out here. What the VIX needs to do is not just close below the 50-day exponential moving average, which it has not. Until it does that, it tells us that liquidity is just a bit tight out there. And the number to be paying attention to, there's going to be two as we speak right now. These will change and fluctuate throughout the day by a few pennies, give or take. But we're looking at 1797. Really, we're looking at 1712. If, in fact, or when the VIX gets below 1712, do not be short the marketplace. Well, unless you just simply have a long-term objective, which you may, and that's cool too. And I would understand why. But what you would want to do is anticipate that you're going to see a rally that could, in fact, rip your face off because of your frustration. So watch those levels. What did I say, 1712? That's probably not even the right number. Let me give you the correct number out here. Holy cow. It's 2021. 2021 is the number that you want to be watching today. 2096 is your 50-period exponential moving average. Getting below that is good, but not as good as getting below 2021. Until we do that, until the VIX index does that, it assures you of a real two-way trading market out here. And that's what we've seen all day long, all day yesterday, all day the day before, maybe all afternoon. Steve Rhodes with TFNN. We'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Let's get to a couple of questions that have popped out here. I posed a question inside the den. Is the 30-year Treasury forming a market top? That was based on a couple of questions that came in from some listeners out here, specifically asking about the TBT, which is a 20-plus year ETF for the Treasuries. And so kind of nice that that question actually came in, because I'm throwing a party next Thursday that you are welcome to. In fact, I want you to come to this party. It's going to be the best TFNN party that has ever been thrown. For all of you users out here that use a number of different tools and systems from all the different contributors here at TFNN, this is going to be a smorgasbord of tools that you're going to be able to actually go ahead and use and apply on charts. There's no cost to it. If you've been a subscriber of mine in the past, this thing has been opened up to you. So everybody, I want everybody to come to this party. Now, when I throw a party, it is a good party. You're going to want to stay for a long time. You're going to want, because you're going to get, the only way that each of us can have more is by becoming more. You know that. And the only way that we can become more is to educate ourselves more. The only way that we can become more efficient is to use tools that allow us to do that. And so I'm going to show you how you can do this. Now let's go try to answer the question with regard to, our bonds potentially topping. Now, one of the tools that that I like to share with you, it's that seventh inning stretch. I like baseball. I love baseball. I used to play baseball out here. It's a little different than the Chapman wave process. So just look for that seventh wave, and when I see it, I know that that I've got to be on high alert out there, and you should be as well. Now here's the daily chart for the 30-year Treasury. Now, the problem with counting these peaks and troughs that sometimes we can miss one of those. And so I went ahead and I created a automated tool. Did that in conjunction with a software company out there. And so at this party that you're going to attend next Thursday, and just come on over the homepage of TFNN, sign up for the party, for the workshop party that we're going to have out here. You're going to get access to this tool. And I'm going to teach you how to use it, and you get access to it for the next 30 days to determine whether or not it is going to be impactful to your trading. And if we take a look at just simply counting these waves, let's just start down here at November the 9th. And you see, all you do is you just grab the tool, you click on there, and you apply it, and it starts to give us different wave counts out here. And it's just so easy. You can see me just clicking and pointing. And so let's just come down here, the trading day of December 30th, and voila. If we come down to the low out here on December 30th and we just simply start counting those waves, you can see that yesterday, and it looks like today, yesterday we got to a seventh wave move out here. So we're in that, this, if you go out to the baseball games out there, you're familiar with the wave that they have out here. Well, and it's the seventh inning when you get to sing, "Take me out to the ballpark." Well, we get to sing here, "Hey, take me out to the next trade that is setting up." So if bonds are going to top, it looks like we are getting a signal today that we want to pay attention to. And it's a great tool. Now, what you also see on my screen out here is you happen to see our TAS market profiles. These are a daily chart we're looking at. These are daily market profiles. And Logan and his crew, they've been kind enough. This is the Ninja Trader platform. You'll be able to use this for free for the rest of your life, quite frankly. Not the tools you get to test drive for 30 days. John and his gang are putting together a set of TAS tools, these boxes as an example, that you're going to be able to use and apply to your charts any time frame, anything. So this helps us to understand, hey, if bonds start to fall from here, where's their first level of support? And in this case here, it's at the 160 and a quarter mark out here. That doesn't mean that's the end of the move, but what you and I can do is anticipate where that first level of support is. Now, that's one tool. Well, there's really two tools, right? We've got our TAS boxes, right? We've got our seventh wave counter out here. And look, and if you prefer to see the letter count versus the number count out here, I went ahead and had this changed the other day. We can do that for you too, because we can go ahead and change that to a letter count out here. So look, even if you're just not a big seventh waver, and whoops, I thought that I changed that. Give me a moment. What did I do there? What did I do? Use numerals. No, it's supposed to be false. I just didn't hit the right button. See, we can, if you like to sing in the key of G like Stevie Wonder, well, voila, there you go. So whether you use this or, look, if you use the Chapman wave, you're going to want to do this too. You can, and I'm not teaching you that. That's what Basil would teach you. But here now you've got a way to be able to easily count those waves. So I like to sing in the key of G, and that looks like what the 30-year Treasury has done for us. Now, there's another, this tool here I'm just simply going to share with you, and let's just take a look at the short-term price oscillator. And if we take, that's what the bottom of my screen is. So here's another chart taking a look at the continuous contract, by the way, of the 30-year Treasury. But you can see the decorations that I have on the top and the bottom, the red and the green diagonal lines. What they help to show you and I is they help to show us lines of divergence. And that's what we've got going right now. We've got a divergent pattern inside my little short-term price oscillator here. After we've been doing that wave count into that seventh wave out here, and no bearish reversal signal just yet. Yesterday's candle was not a bearish reversal signal. But look, if you are looking to take that trade out there in TBT, yeah, as long as we don't get a higher high today, I say go for it. You should go for it. In fact, now we're going to get a different signal, I promise you. Understanding what the underlying instrument is doing versus TBT. And I, quite frankly, I don't even understand, what's inside the TBT, right? It's 20-plus year bonds that are in there. And I can't go to 20-plus year. I can only go to the 30-year as we take a look at the instrument. But if we go take a look at the TBT, let's go do that here. Let's punch that up on the screen. Let's go see what its count is to the bottom. Now, I've got our TAS market profiles. You can see there's a new profile that showed up. But let's just do some counting. I don't know what it looks like from the top to the downside here. You can see it got past that seventh wave, got to singing in the key of H. We don't even know that if you can sing in the key of H out here, but we can start our count from right here as well, see where we're at. So what I see yesterday inside the TBT is a hammer candle. So it's really kind of cool because inside of the 30-year Treasury, we saw that yesterday is likely a seventh wave, and that is coinciding with a hammer candle inside the TBT. So if you want to take the TBT, it's really simple. If you get a close below yesterday's hammer candle, both you and I know that if you are long, you are wrong out here. And so it says, go ahead, take that trade, trading around 38.66. This is for the folks inside that sent me the email, and there were 3 of them, so I'm not sure where it was all coming from. But the 37.62, it's a real simple trade, 37.62. Now, what's interesting enough is what also comes in this party bag that you're going to get. You're going to get access to my position size calculator. Now, if there's one thing that you want to be a master of, it is position size. Now, go ahead and put this up on the chart. And every newsletter subscriber gets this. And so in the case of TBT, one of the cool things is that it automatically tells you what your average true range is during the last 10 trading sessions. And that's 78 cents out here. Now, this helps you and I to be able to go ahead and put together what our position size is. So let's say we were going to take the trade inside TBT and get in right around now. I think it's about 38.68. I don't know exactly. Well, let's put in the trading capital that we need. And I just do this in $10,000 increments. That way it becomes very easy for everybody. So if we get it now, 38.62, let's see if I can find a target out here. Let's use our task market profile. Let's use 40. Let's not use that. Let's when we come back from the break, let's go take a couple different targets for the TBT. Let's go ahead and complete this trade for all of you that are interested in taking it. Steve Rhodes with TFNN. Hope you're ready.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. TigerTV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's up 75, S&P's up 5, Composites up 6. We're talking about the party that I'm going to be throwing for each of you next Thursday. Party full of extraordinary gifts. You know, I would never, ever, ever, and I mean ever, ask you to do something that I wouldn't do. So these are tools that I've mastered over the last many years out here. They are, I just cannot imagine trading without them. They provide us with so much information. I would never pour you a glass of sake that I myself have not tasted first. And the good news is I've tasted a lot of sake before. I'm not sure how I integrate it. Hey, if I'm throwing a party, you can bet that we're going to be pouring some sake come next Thursday night at 6:30, between 6:30 and 7:30. Now, we don't really pour that sake until 7:30, so you'll want to stick around. We were talking about the TBT. We're talking about being able to set up a trade out here. We're talking about taking a look at the tools that I'm going to be sharing with you that you've got access to. So I'm not going to just teach you about them. I'm going to show you how to use them so that you too can use them out here. Let's take a look at TBT again and go take a look at the A to B equals CD to the downside. So our A point out here is going to be the swing point from November 10, 2015. We're going to make, or it made a beeline down to December 12th, where it then went ahead and made a move up into the December 31st level. We can see that yesterday, what the TBT did was it made a 1.272 expansion. That C to D leg was a 1.272 expansion of the A to B leg. Beautiful thing. Now, what was more beautiful for you that want to trade TBT out here, that doesn't guarantee you that you're going to have a winning trade. This is called mastering probability, folks. And if you were going to master probability, you would say you got the signal yesterday with a hammer candle. And today, you're having some additional follow-through. Yeah, TBT's moving sideways out here. What it's not doing is moving lower. And my goodness gracious, we have a new TAS market profile that appeared on our screen yesterday as well. So now what you and I are doing, we know we've got a confirmed pattern out here. In many different senses. We looked at the 30-year Treasury. We see a seventh wave that is out there. So that assists us as well. Now what we're trying to do, the next most important thing, which is to try to figure out, okay, is this trade worthwhile for us to take out here? Now, because we've got this new market profile, here's what I can assure you, courtesy of the folks over at TAS, and that is that we're going to see some real resistance at $40.73 out here. Why does Stevie say that? Well, I'm just interpreting the box set form. And the box set form, we can see that this blue line, the point of control, the new box, is closer to the red line, the resistance level. See the black line down here, and this is my color coding that I use. You use whatever color codes that you want out there on your screen. See how far away it is from that point of control? So this says here, sellers are the ones still in control of this area, but more likely than not, we're going to see a move up to 40.11 to 40.73. But what we also want to do, and that's the beauty, we just come up here, switch daily to weekly. Let's go understand where our weekly profiles are at, 44.60, because that really is going to become, we're going to monitor the trade in TBT as it moves up to the daily profiles. But we want to say, you know what, we'd really like to see, we'd like to see price get up to 44.60. That becomes our target area. So as we come back here to the tool that you absolutely need, look, whether you use the automated version, which you can for during the party time for at least the next 30 days, no cost to you to do this. Well, there is a cost. The cost is not doing it. In this case here, from our position sizing calculator, we're going to enter around now 38.62. We've gone ahead. We've put in our projected sell price of 44.70. All we do is we hit the calculate button, and it gives us everything that we need to know. And what we're doing here is, see, this 1.6, this is our stop multiplication factor. You see, the key in trading these markets, a lot of people think just the opposite. And again, it becomes another 2x4 moment out here. You want to find the gift in every set of circumstance. What's that 2x4 moment? In volatile markets, make your stops wider. Because you can be right on the trade and wrong on the stop. I don't want you to do that. The difference here is just simply the number of shares that you would buy. This is a game. Look, if you're a person that likes to be right more than wrong, which, most people qualify for that out here. Use wider stops. Narrow stops are just simply going to, the seventh wave, I'll teach you how to use a narrow stop. That's a little bit different out here. But otherwise, just make sure, and the time that you are most objective is right now while you are not in the trade. What does this tell us? This tells us if you get in now around 38.62 to place a hard stop at 37.36. For every $10,000 in trading, free trading capital that you have, buy 79 shares. It does all the math for us. Look, it tells us that that's going to take up 31% of our portfolio because you're going to buy 79 shares times $38.62. That's going to take, and it's an ETF, so that's okay to allocate that kind of money to it. But it tells you exactly what to do. And all we're risking is 1% of our working capital. That's $100 that we would be risking on this trade for every 10,000. If you got 100,000, it says go buy 790 shares. You can round up. You don't have to use it to be exact, schmacked out here. You don't need to do that. Now, it says a stop of 37.36. That's a 1.618 expansion of the average true range, 78 cents out there, just subtracting it from the current entry price. Let's go back to TBT and take a look at where was yesterday's low. Let's actually go take a look at the hammer candle. Let's just switch this back here to the daily time frame. And on the daily time frame, it says that the low of that hammer candle was 37.62 versus 37.36. So we are even below that level out there. We're even below that level. Now, that's a beauty. Hey, look, just to see if TBT is actually working, let's go to an intraday chart out here just to see what kind of information we might be able to glean. Let's take a look at our 30-minute time frame out here. And on our 30-minute time frame, see how the most current box that formed out here at about 8 o'clock this morning. So right now I've got this set as picking up intraday data out here. See how this new box formed above the previous one? It actually says, hey, that's what you want to see. That's the nuance of this. And I can show this to you on all different time frames. So for those of you, and I know this was a long way to really get into this, but it's really how you utilize this entire set of tools, which are so unbelievable. You got to think. Guys like John Logan. You got to thank guys like Basil Chapman who teach us how to count these waves to the upside and the downside. You got to thank, Gartley, H.M. Gartley, for teaching us about the A to B equals CD tool out here. And all I'm doing is just simply, I'm just part of their representative because they've already RSVP'd to the party out here. So you should too. That means you come over to the homepage of TFNN.com, you sign up for Mastering Probability. It doesn't cost you anything out here. You get 30 days access to my newsletter service. You'll see that we're inside that nugget trade. It's up like 96% or something already. We got another trade that is up as well. And so as well as a nice real party bag. I know somebody else who's going to come to that party. That's probably Vic in San Francisco. Vic, thanks for calling. Thanks for holding. How you doing today?
I'm doing good. Steve, how are you?
I am doing excellent. You are calling about JNUG. So tell me what you're doing and how I can assist you.
I'm looking at this, and I bought this, a couple of months back, and I was actually losing money on this, but it looks like it has turned in the last few days. And I'm looking at like a cup and a handle, scenario over here. So I'm not sure whether, after a big move like this, to add some positions to it or wait for a pullback.
So you're committed. It sounds like to me you are committed to the junior gold miners out here. Is that
Yes.
Is that what I'm hearing?
Yes.
Okay, so because you are committed to it, let's take a look at it in detail as much as we can when we come back from this break. Can you hold on through the break?
Sure.
All right, and we're going to go back out to San Francisco, where Vic's probably going to the Super Bowl game on Sunday. You going to the Super Bowl game?
No.
He's not. Well, we'll all be watching it on television with some Fritos and some dips, some chili dip or something. Steve Rhodes with TFNN. We'll be right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow, she is, what is she doing? She's up 48 points. S&P is up 1. We're on the line with Vic in San Francisco, and we're taking a look at the Junior Nugget, which is the Direction Daily Junior Gold Miners ETF. And, Vic, you say you've been in this for a few months. Are you back to break even, or tell me where you're at out here?
No, I'm not back to break even. You know, I'm like down 30%. You know, I shouldn't have I should have put a stop, but I didn't do it, and that's why had to get into some pain, for a couple of months.
Vic, the good news is you're not alone. We've all done it. So, but the good news is that once we've all done it, we don't do it again because it's just not a fun thing out here. So the question is, and you're looking to add to that losing position, which is not that means you're trying to average down, and it's not really a great thing. But let's just look at the trade. Let's just take a look at this trade here and put that trade aside. Okay? And let's just take the call as if you were to say, hey, I like the movement that I've seen inside of the junior gold miner trade out here, and I want to get in on it. Where should I get in? Let's use that as the basis for this conversation out here. The first thing that I would say to you is I would want to understand what the components are of the junior nugget out here, the JNUG. And I did a quick search. I was hoping that I could pull that up, but I couldn't. As an example, I am in the senior nugget trade, the NUGT, which we bought back on the 20th of January out here. And so that is up nicely. And the reason why I say that is because I can show you the top 9 holdings right now. I know exactly what is going on with that trade because I don't know exactly where it's going to go. I mean, what I can anticipate where it's going to go, but the screen that I just put up here are the top 9 holdings inside the GDX, which basically is where the nugget is trading off of. And inside of it, the top 9 holdings, as an example, Vic, represent over 50% of the weighting structure in there, with Barrick Gold being the number 1. So as an example, and the reason why I want to understand that is because I'm trying to figure out how to manage that trade as well. So inside of Barrick Gold, I have a price projection somewhere around 1173 to 1203 out here, as where price is going to likely head to. So I say, okay, inside the number 1 weighting inside of NUGT, it has more room to run to the inside. Newmont Mining, as an example, is the number 2 weighting structure. This looks like, to me, it wants to run to 2520 to about 2598. So this still has some energy to the upside. Gold Corp happens to be the number 3 weighting structure. What I know about Gold Corp today is it took out a descending trend line. It did it with a wide-ranging bar. It's got a gap in here. It made it up to that first level, 0.618, but probably it wants to head to 1440. So the point that I'm trying to make here is I would want to do the exact same thing with inside of the equities that are inside the junior miners to really help me be able to manage the trade that you are in. And I would do that right now if I knew what those symbols were, but I can't. So that is step number 1 that you want to take a look at. Let's just assume we can't access that data. What should we do out here? What we should do, I would imagine that the junior miners are going to trade in the same direction as gold is. So that says we've got to come over and take a look at gold and see where this thing is headed to. And in the case of gold, it's probably on its way to completing an A to B equals CD to the upside. Let's go take a look at what that pattern here looks like. In the case of gold, if we put that tool on our screen out here, the A point that I'm going to be using, because this helps us to manage where price is headed to. So I'm just using some correlations out here to assist you in that trade. What gold has done today, it's made the 1 to 1.272 A to B equals CD pattern. It looks to me like this has some further room to run to the upside. Maybe it's going to run into the 1160 to 1178 area, but we are probably in the late stages of this game inside of gold where it's eventually going to get to one of these areas where it's going to pull back. So since you are not in this trade yet, I'm assuming that you and I are now just talking about this next trade that you're looking at. I am going to suggest that you want to be patient, that you don't want to go ahead and at least buy this right now today. You are in reality, you are already inside this trade out here. I think now is the wrong time. That doesn't mean that this thing can't take off to the upside. I can't control where price is going to go. But the probability suggests we are nearing that first phase where there's going to be a little bit of relief, a bit of movement to the downside. And that's the one where you would want to take a look at whether it's JNUG or whether it's just simply the NUGT. And in the case of JNUG, and taking a look at our TAS market profiles, this says that maybe price inside this could fall back to the 3111 area. You know, right now what it's done, Victor, is it's made a 100% move of a move. That January 7th swing point inside JNUG is very important. Now, it has 1 million shares out there. You've done 667 through about the first 4 hours of trading. So it seems like it's approaching that swing point with similar type volume out here. But oftentimes, what will happen is an equity, an ETF will make that 100% move of a move and then pull back. So I would just simply be patient. And I would say my target, if I were going to go ahead and buy JNUG, I would be looking for right now the price level of probably 28.39 to 31.11 as to my ideal areas to take a look at getting into that trade. But what you really should do, are you a technology, do you do much in the way of charting?
Yeah, I do look at some of the charts and the technical analysis. I know, you know, sometimes it's too late after a big move, but you know, with the dollar coming down and you know and gold making a sharp move up, you know, I was just thinking, you know, whether it moves like 10-15% every day. So whether it would be too late for me to get in, and that's why I was in a doubt, you know, what to do.
Yeah, I'd rather you buy this on it's Thursday afternoon. It's 1:48. Tomorrow at 3:30, I'm going to have a bit more information on what the large commercial traders are doing inside gold. They've been forecasting for weeks and weeks and weeks that gold was going to make a major bottom. And that's why my clients and I were out there scanning and paying attention. There were a couple patterns that we were watching like a hawk, and as soon as we got the pattern that said throw the switch, we didn't even know the trade was going to work, but we said we've got the information we want. We went ahead, we threw that switch, and we bought that back on the 20th of January, I believe. And now we're at that stage where we're managing the trade, anticipating that we are going to get exited from the trade. I'm going to let the market at this stage here pull me out of that trade unless I see something different. But I could not manage that trade, Victor, without looking at the top 10 or top 9 components inside it to really understand, what is going on. For example, number 8 component is silver wheaten. And silver wheaten, looks like this thing is going to run out of energy real soon out here. It may have run into resistance today for all I know. So my best suggestion is just simply wait for a retracement and buy a retracement, and especially because you're already in this trade here that that hasn't worked out. But I would I would underscore, go find out what the components are inside there. Go do the work and
right.
Go ahead.
Can you look at one more? So it's Kinross Gold. It's KGC.
KGC. So we take a look at Kinross Gold now. Kinross Gold, where are they in? Are they the ones they're in Russia, maybe? Kinross Gold? I'm not sure. Hang on through this break. We'll go finish it up by taking a look at Kinross Gold. Are you in this trade?
Yes, I am.
Okay, this looks pretty good. Steve Rhodes with TFNN will go take a look at Kinross Gold, trading out at $2.07. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin as they break down the world of trading trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. Dow's up 24. S&P is off a couple of points. And let's go back out to my guest host, Vic, in San Francisco. So, Vic, you were saying you're inside Kinross Gold, which is trading right now at 207. Tell me, is this a long-term trade for you? Just give me a little bit of information what you're looking for.
Yeah, it's a long-term trade. In fact, I bought this and JNUG all together, a couple of months back. So,
okay.
And then I was holding on to it for some time. I was thinking, either I know the JNUG it actually moves a lot. It's not like it's a trading vehicle, You shouldn't be holding it for a long time. But I was thinking, maybe I can add on to Kinross Gold instead of JNUG.
So let's take a look at Kinross Gold. One of the nice things one of the nice patterns here made a real nice, at this stage here, what we'll call a potential double bottom. It was nothing more right now than a test of a swing point low, which was from September 11th. And Vic, what that did on September 11th, formed a nice little hammer candle, as many gold equities did, and it had volume there of 24 million shares. And what you like to see is a test of a swing point like that. In this case here, that swing point test came on January 19th with 17 million shares, closed back above $1.35. You had a total rejection on price and volume of a swing point. There was also an A to B equals CD pattern that formed down there as well. Now what we're seeing is we've seen a nice move off of that low. It would really qualify as, a double top or double bottom down there. The reason why I use that is because, in the case of double bottoms or double tops, what you can use as a gauge is typically that little consolidation zone out there becomes your price target. And in the case of Kinross Gold, that would say that if it can clear the $2.19 area, I'll just use that as the conservative one, that this thing would run up to about $3. Again, if we take a look at, I want to just see where it's doing with regard to market profiles. Nice volume in it today. So what you should anticipate is Kinross Gold is going to not just test 219, it's probably going to test between 216 and 231. And that going back to its most recent swing point high, which was October 28th, which had 20 million shares out there. So you're coming into that level, although it has not tested it yet. So today would be a wonderful day for this to at least get up and tag the 216 area. Don't know if it will or not. The reason is because you like to come into a swing point with volume. So if it doesn't test the 216, then you and I have to take a look at what's it doing tomorrow. Has it used up all of its energy out here? If you're going to try to add to this position, it would be the same thing in that you want to add on a retracement. Which I anticipate is coming inside of gold. In this case here, even though this can run to the 240-ish type level, I would say you want to buy this on a retracement down to $1.78. If this got down to $1.78 out here, and somebody might say, hey, $1.78 versus 208, just 30 cents, what the heck? It might actually, the buy on this might really be $1.55. It could even be $1.35. We just really have to take a look at volumes. I don't think that chasing this right here, right now, is the thing to do. I'm really watching gold, and I do anticipate that we're going to see retracement. The dollar thing, you mentioned the dollar pulling back. I've watched gold for a long time here and do nothing with regard to what the U.S. dollar index is doing. In fact, quite frankly, we're probably better off watching what gold is doing in euros, not in dollars out there. So I hope that all that assists you. And please, I want you to RSVP for that party that I'm throwing next Thursday. So come on over to the homepage at TFNN.com. Have a great day. We're going to a hard, the show's coming over, so thanks so much for calling. You bet. Stay tuned, folks. David White is up next. And then we got Tom O'Brien and Andy Heck from 5 to 6. Take care.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.